Well, good morning then, folks, as we are in European trade on Wednesday, the 9th of August. Now, we've had a bit of a bounce back from the sell-off yesterday. Obviously, in yesterday's videos, we alluded to some pretty aggressive risk-off trading in yesterday's session, and the dips have been bought again in equity markets, which we'll have a look at once we get around to some charts. But apart from that, there's not a great deal of yeah, there's not a great deal of fresh information now overnight, apart from the Chinese data, which we will have a look at once we get around to the calendar. We can see across the headlines, not really much. Apart from China, you can see dollar eases as risk sentiment improves. China moves to support yuan, so the safe haven dollar drifted lower in Asia on Wednesday as gains for European equity futures pointed towards improved risk appetite despite fresh signs of the Chinese economy struggles. But also maybe global economy positivity. I'll explain that once we get around to it. We can see stock index upside across the US, across Europe, pretty mixed across the Asia Pacific region, which may be understandable once it's China in focus. But bond yields mixed as well. The US dollar lower, in line with those stock indexes higher, and you can see your Aussie and your Kiwi higher then as well. Everything else is pretty mixed across the board. Now we'll jump across to the calendar and have a look at China's first deflationary reading in over 2 years. Now actual actual CPI print minus 0.3%, which is slightly above consensus, but deflationary readings in China is probably a positive for the global economy in terms of getting inflation under control. Now, that can help feed into the rest of the world in order to help cool down prices further, which is obviously what these central banks are trying to achieve by the most aggressive hiking cycle that we've seen in a generation. Really, apart from that, we've not got much else to go off in terms of fresh fundamental drivers. With that CPI printing negatively, it does alleviate some stress on global markets, and we can't see a bounce back into the close yesterday, but a rally has continued overnight off the back of that Chinese data. Now, I think it's important something to note. These dips keep getting bought at the moment. Dips back here on Thursday of last week, bought, dip on Friday and into Monday morning, bought, then sold off again yesterday, and then the dip again, bought. You can see the dip bought on Thursday in the Dow Jones, and again you can see the dip bought then on the Nasdaq, which did flush through these lows, didn't have the follow through maybe that markets would have hoped for on the break of that support level. But the Russell showing a bounce back as well. The DAX rallying, the Euro stocks rallying hard, the FTSE rallying. Never really managed to gain much downside, the FTSE, but through these highs now in terms of the European Open. So a bit of positivity in stock markets today, but ultimately range bound price action likely to probably continue until CPI tomorrow. So probably selling the highs, buying the lows, maybe a decent way to play it into tomorrow's trading. You can see bond yields pretty mixed, not doing much over the course of yesterday, bar the sell off to begin the day, and then chop sideways apart from that. So tens and twos in the US relatively sideways, the S&P sideways. You can see the Aussie against the Japanese yen, which is a good proxy for risk. Again, pretty sideways. It is up testing the upper band of this range though. Maybe that could prove fruitful as a little bit of a pop higher through the round number at 94, but CAD yen chopping about as well. Gold moving lower, not really doing too much though. I mean, it is kind of grinding lower, but again, pretty lack of a directional bias. Oil, interesting one yesterday, did flush through the lows of that head and shoulders, which we did allude to yesterday, but then bounced back aggressively once it got kind of around to 1-2 o'clock, which is when historical pit trading for oil kicks off. So volatility and volatility and kind of liquidity picks up around 2 o'clock on oil in the futures trading, and that is a push higher extremely aggressively off the back of no real fresh fundamental drivers. Obviously a dip being bought, people thinking that it's a good price to pick up on oil, which we did have a look for. A bit of a pullback, then a nice pullback would suggest another level to buy at. No real level to buy at. It was kind of randomly turned around in terms of actual support and resistance, but did tag off the 80 round number and then did push higher. So obviously buy orders set for the round number of 80 and then did push back higher. So obviously markets feeling at the sell off in oil. proved a good dip buying opportunity in the price of the commodity. In terms of the US dollar, lack of clear direction when we were down yesterday in terms of our Aussie, Kiwi, Euro and Sterling, and now we've popped back higher, similar to stock markets. Dollar Swiss higher yesterday and slightly lower. Again, range bound price action. Dollar yen, range bound price action. The dollar CAD rallied with oil selling off, and then oil rallies and then dollar CAD sell off, so the expected reaction to that. We are at this level that we looked at on Monday on the dollar index. We pushed off this level twice yesterday, then break through, or twice on Monday, sorry, and then broke through this yesterday. We've come back and now we've retested it, which is interesting to see if it may hold in terms of a support level. It does seem like it's breaking through it right now, and did reject off that 102.80 level up there. So as long as equity markets remain supported, nothing really happening in the yields, this is probably likely to continue lower and make its way back down towards the round number of 102. Apart from that, really a lack of fresh fundamental drivers until we head into CPI tomorrow. Is markets likely to gain any sort of meaningful traction into CPI tomorrow? At hazard a guess, probably not. Do need to wait and see how those figures come out. But Chinese inflation this morning, the main focus in the Asian session, did pull back and produce their first deflationary reading in over 2 years, which is a contributing factor to some positivity in markets this morning, off the back of expectations for that to feed into global inflationary pressures. So that's what's on the agenda this morning. In terms of what we do into CPI tomorrow, maybe slightly tricky range bound trade unless you get any fresh fundamental drivers. So probably be a little bit cautious about going and piling into any positions over the course of today. But we'll see how markets react over the course of today, but maybe selling the highs and buying the lows is the way to play it into CPI tomorrow.